Business English with Richard Halligan. In this topic, we're looking into investments. What is business investment? The act of investing has the goal of generating income and increasing value over time. An investment can refer to any type of method used for generating future income. This includes the purchases of bonds, stocks, or real estate property, among other examples. Additionally, purchasing a property can be used to produce goods that can be considered as an investment. In general, any action that is taken in the hopes of raising future revenue can also be considered an investment as well. Investing is aimed towards the potential for future growth or an income. There is always a certain level of risk associated with an investment. An investment may not generate any income, or it may actually lose value over time. For example, there's a chance that you could invest in a company that ends up going bankrupt, or a project that fails to generate any profit. This is the primary way that saving can be different from investing. Saving is accumulating or keeping money for future use and entails no risk, whereas investment is the act of leveraging money for a potential future gain, and it entails some level of risk. Let's have a look at what type of investments we have. First, we have economic investments. Now, in any country or any nation, economic growth is always related to investments. When companies and other parties engage in sound business investment practices, it typically results in economic growth. For example, if one party is engaged in the production of goods, it may manufacture or acquire a new piece of equipment that allows it to produce more goods in a much shorter period of time. This would raise total output of goods for the business. Now, taken into combination with the activities of many other entities, this increase in production could cause the nation's gross domestic product, or known as GDP, to rise. Next, we have investment vehicles. An investment bank provides a variety of services to individuals and businesses, including many services that are designed to assist individuals and businesses in the process of increasing their wealth. Investment banking may also refer to a specific division of banking related to the creation of capital or other companies, governments, and other entities. Investment banks underwrite new debt and equity securities for all types of corporation, aid in the sales of securities, and help to facilitate mergers and acquisitions, reorganizations, and broker trades for both institution and private investors. Investment banks may also provide guidance to companies who are considering issuing shares publicly for the first time, such as with an initial public offering, or known as an IPO. Now we have growth investments. They are more suitable for long-term investors that are willing and able to withstand market ups and downs. We have shares. Shares are considered a growth investment as they can help grow the value of your original investment over the medium to long term. If you own shares, you may also receive income from dividends, which are effectively a portion of a company's profit paid out to its shareholders. Of course, the value of shares may also fall below the price you pay for them. Prices can be volatile from day to day, and shares are generally best suited to long-term investors who are comfortable withstanding these types of ups and downs. Also known as equities, shares have historically delivered higher returns than other assets. Shares are considered one of the riskiest types of investments. Now we're on to property. Property is also considered as a growth investment because the price of houses and other properties can rise over a medium to long-term period. However, just like shares, property can also fall in value and carries the risk of losses. It is possible to invest directly by buying a property, but also indirectly through a property investment fund. Next we have defensive investments. These are more focused on consistency, generating income rather than growth, and are considered lower risk than growth investments. Now we have cash. Cash investments include everyday bank accounts, high interest saving accounts, and term deposits. They typically carry the lowest potential returns of all the investment types. While they offer no chance of capital growth, they can deliver regular income and can play a more important role in protecting wealth and reducing risk in an investment portfolio. Fixed interest. The fixed interest investments are bonds, which are essentially when governments or companies borrow money from investors and pay them a rate of interest in return. Bonds are also considered as a defensive investment as well, because they generally offer lower potential returns and lower levels of risk than shares of property. They can also be sold relatively quickly like cash, although it's important to note that they are not without the risk of capital loss as well.